Bazzani with today's ETF Edge on this topic. Bob?
Great conversation, Scotty. I'm Bob Bazzani again. Today's ETF Edge. Commodities have been on a wild ride in the past few months, particularly oil and natural gas. What's going on? I want to talk with John Love. He's the president and the CEO of United States Commodity Fund. They run the largest oil and natural gas ETFs out there. John, you run U.S. Oil Fund. That's USO. You own oil futures contracts in this. Oil gone from, what, 65 to 80 and back to 70 in less than 2 months. OPEC's been cutting supplies. There's worries about recession. So it makes sense of this for all of us, and explain the trading in USO.
Sure. Well, nice to be with you, Bob. And it's definitely been a choppy year for crude. It's been bouncing around, as you said, exactly between those two things. Worries about recession, worries about, what's the Fed going to do next? Are they going to stick to their convictions? And I think lately, especially the debt ceiling and the banks and all of that. On the other side of things, you have OPEC, who have clearly signaled they're going to support the price. They cut production in last month. They're meeting again in June. I think if they see the price going down again, they're going to cut again. They need that oil revenue, as the panel just indicated. And that's different than they've been in recent years, where they've been willing to defend their market share. So I think we're going to see, OPEC continue to do that. I think we'll probably continue to see a bit of push and pull, but it probably overshot to the downside last week. There's a lot of good reasons to look for upside in the future.
You know, you also run the natural gas ETF, the biggest one out there. UNG is the symbol there. That's tanked this year. I mean, mid-December, we were at $7 in that gas. Then we went to $2, but it's stabilized in the last month. Have we hit a bottom? What's driving that dynamic in natural gas?
Yeah, I think that, there was a big move down. Technically, it certainly looks like we've hit a floor. Now, whether that holds, again, depends on fundamentals. The easiest way to understand what happened is really look at how much natural gas we have in storage right now versus a year ago. A year ago, we were 16% below the 5-year average. Now we are 20% above the 5-year average. So there's just an abundance of natural gas. Also, the story changed. As you know, we had good fundamentals going into 2022, and then Russia invades Ukraine. The price shoots up to $10, the highest level it's been since 2008. And when basically we were heading towards winter, there were a lot of fears of disaster. Winter, people being able to heat their homes in Europe in winter. That crisis didn't materialize. The Europeans stockpiled more natural gas than they usually do, 5% more than they usually do that time of year. And we ended up having a mild winter in the U.S., mild winter there.
Yeah, that's the key right there. So just a quick question, and a quick answer I need here. The number of shares outstanding in the natural gas ETF, the UNG, went through the roof this year. I mean, why is that? Are traders shorting natural gas and then using UNG, and then the market makers have to create more shares to accommodate the short sellers? Is that what's going on?
Yeah, that's part of it. I think there's multiple reasons people use it. I mean, I hear from just people all the time that a commodity can't go lower, and frankly, yeah, it can go lower, and people need to keep that in mind. But I think a lot of people do see that, we've seen this again and again in 2008 with oil, 2009 with natural gas. When it gets really cheap, there is a lot of thought that, wow, it was at $10, it's now down at $2. If things reverse, there's a lot of upside. And yes, as you said, I think there are people, playing the short side. There are people in the options market using it as a hedge. So there's a lot of different reasons people create, but we certainly have seen a lot of good flows this year.
Thank you, John. We got much more on the trading in oil and natural gas ETFs coming up on ETF Edge. That's 1:10 p.m. Eastern time. We'll also get an update on using ETFs to trade agricultural commodities. John will be joined by Sal Gilberti. He's the CEO of Tucrium, which runs ETFs for corn, for wheat, sugar, and soybeans. That's etfedge.cnbc.com, 1:10 p.m. Eastern time. Scott, back to you.
All right, good stuff.